The Bank of Canada has cut rates this week. Headline simple, ripples huge. What does this mean for Ferny real estate? And stick around for big Koocanusa news right at the end. Welcome to the Property Mindset Podcast, where we explore everything real estate, from market trends to practical strategies for success. Whether you're a buyer or seller, or an inspiring investor, a seasoned professional, or simply someone who loves real estate, this podcast is for you. Hey everyone, I know I've been quiet for a bit, took a summer breather, but after bumping into a bunch of you lately and you asking, where's the content, we've decided to come back. So a quick heads up before we dive in, the Bank of Canada has just cut its key rate this week, and it's one of those moments where the headlines sound simple, but the ripple effects are anything but. Today, I'm breaking down what the rate cut really means, why the economy is wobbling, and what all of this could mean for you, especially if you live in or are watching the Fernie's property market. But more importantly, stick around to the end of the video because we've got some really exciting news about our own real estate project. So here's a short version up front. The Bank of Canada this week trimmed its policy rate by 25 basis points to 2.5%, the first cut since March, because the Canadian economy is slowing and inflation pressures have eased. That's good news for variable rate borrowers, but the story behind the cut is layered and it's definitely worth unpacking. So why has the Bank of Canada cut rates now? The labour market has softened. We're definitely seeing job losses and rising unemployment. GDP has pulled back. Exports, especially to the US, have declined sharply. Business investment is on pause. Companies are nervous because of trade policy uncertainty. Underlying inflation has cooled. The headline CPI is below the 2% target, and core measures have lost upward momentum. Put it all together, and the Bank of Canada is buying some breathing room for consumers and businesses. They want to support demand without stoking another inflation surge. So what does this really mean to you? Immediate impact. Variable mortgage holders will likely feel some relief first. Refinancing and variable rate payments will get cheaper. For homeowners locked into fixed 5-year rates, not so much. Fixed rates move more with the bond yields than with the overnight rate. The Bank of Canada's approach is cautious. They didn't promise a string of future cuts, so we're waiting on the new data, so nothing here is guaranteed. The trade backdrop, tariffs and uncertainty. Now the wrench in the gears. Tariffs and trade tension with the US are a big reason business confidence is shaky. Tariffs have hit key export sectors, which feeds into the GDP drop and the job losses we've just mentioned. That uncertainty is why some businesses aren't investing right now and why the Bank of Canada is being careful about signalling the future. It's also why your local economy, even in Ferny, can feel the effects. Few dollars flowing in from trade-sensitive sectors trickles down to jobs, spending, and local businesses. I'm sure you've heard of Warren Buffett argue that right now, stocks often look easier and more liquid than property. Well, he's not wrong. Real estate takes hands-on management, ongoing maintenance, and it's far less liquid than a market order if investment is what you're looking for in real estate. That said, for most people, real estate still checks boxes stocks don't. It's a long-term hedge against inflation and, critically, a way to put a roof over your head. It's not an automatic win. You've got to treat any real estate investment purchase as a business when you buy, factoring time, costs, and local dynamics, and diversity where it makes sense. Remember the old adage, you usually make your money when you buy, not when you sell. So getting the price and the timing right matters more than ever right now. In markets with constrained supply like Ferny, those local fundamentals can still make property a very sensible part of a balanced plan. Just go in eyes open. Housing market outlook, national signals, and the local reality. Okay, so where does this leave the housing market right here in Ferny? The rate cut could nudge activity higher. Buyers who've been waiting may step in, but affordability is still tight. For real recovery in buyer activity, rates need to, in my opinion, come down further. Also, regional differences matter. Some markets will pick up faster than others. And here locally in Ferny, remember two things. Inventory dynamics and demand for lifestyle properties is always high. Ferny historically has limited supply and strong demand for all types of homes, not only recreational. But it doesn't make us immune from any downturn. If rates fall further, we could see definitely renewed interest, especially in the sub $1 million market, but tariffs and job losses could temper that too. So practical takeaways for buyers, sellers and investors. If you're watching this as a buyer, get your financing lined up and understand whether variable or fixed fits your risk tolerance. The benefit of a cut is felt fastest on variable rates. So what you might want to do is go with a variable rate, and if the rates keep dropping, have a flexible product where you can lock in at a fixed rate down the road. If you're selling, this might be a good time to market well and price realistically. Buyers are cautious, but active where value lines up. And if you're an investor, treat real estate like a business. Factor in management time, vacancy risk, and local demand drivers. Diversity is where it makes sense. The bottom line, the Bank of Canada rate cut is a supportive tweak for households, but the economy has got some real headwinds. Trade uncertainty, weak jobs, and constrained business investment. Real estate remains a viable long-term play for many people, particularly in places with limited inventory like Ferny, but it's not a set and forget trade. Do the maths, get good advice, and plan for all different scenarios. Okay, now for the big news. Drum roll, please. We have just purchased lot number 81 at Koocanusa Village. We're right at the top of the end of the terrace, and we're super happy with our purchase. The deal closes this week, and we are planning to kick off the build straight away. We've already started drafting up the plans. Tomorrow we meet with the builder, and we'll be documenting this process every step of the way. Design meetings with the draftsman, site visits with the builder, conversations with the developer and more. Our plan is to turn our lake house project into a series so you can follow along, with the goal of having the lake house ready for next summer. Well, that's the plan anyway. So we're super excited for you to be along for the journey. So thanks for listening. If you want a deeper chat on how the rate cut affects your mortgage options or what it could mean for Ferny listings, give me a call or book a strategy session with the link below. Don't forget to subscribe, leave a comment with the questions you want answered next, and share this episode with anyone watching the Ferny real estate market. So until next time, I'm Phil Gadd. Stay focused, stay informed, and keep building your property mindset.